Welcome to 79 Studio. Got cash gathering dust? You're staring at the same split second. Lock in a nice 4%, or hold tight for the next Fed move. Right now, CD rates are pretty much on pause. You aren't seeing new highs pop up just yet, but that standstill is likely temporary. MarketWatch reports things could change fast after the next Fed meeting, or even the one after that. Basically, if you're watching the rates, a shift is coming. So, what does this mean for your wallet? You're basically trading timing for security. Locking at 4% guarantees that yield while the Fed debates. Waiting gives you a shot at better numbers if the central bank keeps pushing rates higher. But if the Fed cuts, those standstill rates could turn into lower ones really fast. Your move depends on whether you think the next meeting breaks the streak. While everyone's chasing AI headlines, one money manager is quietly placing a massive bet on an Indian giant left out of the hype. Singapore's Helios Capital Management just named the Adani Group's flagship stock its next big fund winner. They see fresh growth waiting to be tapped. Right now, investors are so fixated on artificial intelligence that broader Indian markets are getting completely ignored. Helios is banking on this overlooked slice of India to step into the spotlight before the rest of Wall Street catches on. So what's actually happening here? It shows where institutional money looks for returns when AI valuations get stretched. Keep an eye on whether other funds follow Helios into these quieter Indian sectors, and watch if this picks up real momentum as markets finally rotate away from crowded tech trades. That trade everyone blamed for the last big market scare? Yeah, it's back. And honestly, it's packing way more weight than before. Goldman is flagging that the carry trades in currency markets is roaring back to life. We're talking about investors borrowing cheap money again to chase higher yields across borders. The scale is the kicker. Goldman says current levels are bigger than we've seen in many years, reviving that exact leverage some tied to the massive blow-up earlier this year. Why watch this? Carry trades thrive on calm markets and steady trends, but they get brittle when conditions shift. Goldman highlights that this leverage pile is swollen to multi-year highs right now. That means the market has a heavier load of risk than before. So if sentiment turns or rates move against these bets, that crowded positioning could force a rapid unwind rather than a slow grind down. Lumen just bought Alkira, and this move is all about controlling cloud connections from the data center right out to the edge. The deal is officially done. Lumen grabbed the cloud-native networking firm Alkira. CFO Chris Stansbury walked us through it on Bloomberg Businessweek Daily. Alkira brings a single control plane that lets enterprises juggle connectivity across their cloud setups, data centers, and edge devices, all from one dashboard. It's about turning a scattered network into something manageable. Why does this matter? Enterprises need better tools for hybrid setups, and building that takes time. By buying Alkira, Lumen instantly gains that cloud-native tech stack. The single control plane cuts through the complexity of managing cloud, data center, and edge links separately. This signals Lumen is building real networking muscle to compete where customers actually are. SK Hynix just hit US trading floors, and investors are already handing out a premium to get in. The stock kicked off the day at $170 a share. That's clearly above its initial public offering price of $1. It's acting as a live test of investor demand for AI-related companies right now. That jump means capital is still chasing AI hardware. What to watch next is whether that opening premium holds once full market volume kicks in, or if it cools off quickly. It gives us a quick read on how hungry buyers actually are for chip makers feeding data centers.